Within the next few months, AI trading agents will match the performance of the world's best human traders. That's not a projection from some startup. That's what Robinhood CEO just told CNBC on live television. And here's what makes this wild. These AI systems aren't just matching them on easy days with clear market conditions. They're already beating experienced human traders in specific strategies, and the gap is closing fast. Think of it like the difference between a grandmaster chess player and a supercomputer. For decades, humans held a massive edge because they could read the room, understand fear, greed, unexpected news, market psychology. But AI agents are learning to do that too, processing thousands of data points per millisecond and spotting patterns humans would need years to notice. Robinhood isn't alone in this race. Every major financial institution from Goldman Sachs to JP Morgan is quietly building their own AI trading systems, knowing that whoever gets there first wins enormous market share and trading profits. The CEO's announcement is basically a public acknowledgement that this milestone is imminent, not decades away, not years away, but months. And here's where it gets interesting. Most people assume AI in finance is a distant future thing, something to worry about later. But it's already here, already reshaping how billions of dollars move through markets every single day. Algorithmic trading isn't new. For the past 30 years, financial firms have been using computer programs to execute trades faster than humans ever could. A human trader might spot a pattern and place an order in half a second. A machine does it in milliseconds. But here's the critical difference with AI agents. They don't just execute orders faster. They actually learn and adapt. Traditional algorithms follow a rigid script. If price drops 5%, sell. If volume spikes, buy. It's deterministic, mechanical, no creativity. These systems were powerful, but they were also predictable once you figured out the pattern. AI agents work completely differently. They're trained on decades of market data, learning to recognize subtle signals that even experienced traders miss. An AI agent studying stock behavior can learn that when a certain executive tweets at 3 a.m., specific stocks move in predictable ways. When there's a Fed announcement scheduled, it learns how sentiment changes across different sectors. It processes earnings calls, news articles, social media sentiment, macroeconomic indicators, all in real time. And crucially, it learns from its mistakes. If a strategy worked 60% of the time but a new market condition emerged, the AI adapts. This is the leap from dumb automation to genuine artificial intelligence in finance. That's why Robinhood's CEO saying AI agents will match human traders soon isn't hype. It's recognition that the technology has fundamentally changed the game. So how exactly do these AI trading agents work? Imagine training a system like teaching a kid to play poker through trial and error with feedback. You start with decades of historical market data, millions of examples of what happened before, during, and after major market moves. The AI agent runs thousands of simulations, testing different strategies. Buy this stock when it breaks above this price level. The system tries it, tracks whether it made money or lost money, and learns from the outcome. It processes centuries' worth of market scenarios in just hours. This is called reinforcement learning. The agent gets rewarded for profitable trades and penalized for losses. The real breakthrough is that these agents learn to combine signals in ways humans never would. A human trader might watch one indicator plus news sentiment. An AI agent might discover that the real edge happens when this price indicator signals a breakout and a specific commodity changes and certain Twitter accounts go quiet, and the Fed speaker history shows dovish tendencies. That's a 73% probability the market moves this direction. That's the magic of AI. It finds hidden patterns across thousands of variables simultaneously. It's like having 1,000 eyes, perfect memory, and the ability to process everything instantly. That's what these agents are, artificial brains, optimized entirely for spotting market opportunities and acting faster than any human ever could. What does this actually look like in practice? Picture this: a major tech company announces earnings that exceed expectations, but the stock price drops anyway. Why? Because AI agents passed the earnings call and detected subtle language that suggested slowing growth ahead. They acted on that signal faster than news websites could even publish headlines. Meanwhile, human traders were still reading Twitter trying to figure out what happened. This happens constantly now. An AI agent trained by Goldman Sachs spots that whenever copper prices spike on commodities exchanges, semiconductor stocks tend to rise 48 hours later. It buys semiconductor stocks before the correlation becomes obvious to everyone else. A Citadel AI system notices that when treasury yields change at specific times, energy sector stocks move in particular directions. It exploits that pattern hundreds of times per week. These aren't rare occurrences. Financial firms run hundreds of these AI agents simultaneously, each hunting for different market inefficiencies. Each one operating 24/7, never sleeping, never getting distracted, never letting emotion override logic. Some agents trade thousands of times per day. Others hold positions for weeks. But they all have one thing in common. They're extracting value from the markets faster than human traders can recognize it's happening. And here's the twist nobody expected. They're not competing just with each other. They are competing with every human trader on the planet, and increasingly, they are winning. So where does that leave human traders? Let's be clear about the advantages AI agents have. First, speed. A human reads an earnings report, thinks about what it means, and decides. That takes maybe 30 seconds. An AI agent processes that same report, cross-references 50 data sources, runs risk calculations, and places a trade in 200 milliseconds. That's 150 times faster. Second, consistency. A human trader has good days and bad days. Fatigue, hunger, personal stress, all that clouds judgment. An AI agent operates identically whether it's Monday morning or Friday evening, whether markets are calm or chaotic. Third, scale. A human can watch maybe 100 stocks. An AI agent monitors 10,000 stocks, every cryptocurrency, every commodity, every exotic derivative. It's tracking more positions than 1,000 humans could handle. But human traders still have advantages AI doesn't fully replicate yet. They understand context and nuance in ways machines struggle with. When a CEO does an interview, a human can detect hesitation, read body language, catch the unspoken subtext. An AI reads the transcript. That human intuition built on decades of experience, that's powerful. But here's what worries traders at major banks. That advantage is shrinking fast. AI agents are getting better at reading context every single month. The window where humans hold any edge at all is closing rapidly. What happens when it closes completely? Here's where it gets complicated. When AI agents start matching human traders in performance, the financial system doesn't just stay the same, it transforms. For one thing, trading becomes even more fragmented and algorithmic. Right now, maybe 60% of stock trades are automated. If AI agents beat the best human traders, that percentage shoots toward 90 or 95%. What does that mean? Faster price movements, less stability. Stocks that used to move gradually now jump in milliseconds. Your retirement account value might swing thousands of dollars while you sleep, driven by AI reacting to signals you can't perceive. Another risk is concentration. The firms that build the best AI agents, Goldman Sachs, JP Morgan, Citadel, Renaissance Technologies, they'll make massive profits. Traders who can't keep up get pushed out. We'll see wealth flowing even more aggressively to the top. There's also systemic risk. What happens if all these AI agents spot the same pattern and pile into the same trade simultaneously? They could destabilize entire markets. Financial regulators only just began worrying about this. They don't have rules yet for AI trading because it evolves faster than regulation moves. And here's what the headlines aren't telling you: we're already living through this transition. It's not a future scenario. It's happening right now. So if you're not a professional trader, how does this actually affect you? The most direct way is through your investments. If you have a 401k, a brokerage account, retirement fund, even passive index funds, the underlying stocks are increasingly bought and sold by AI agents. That means the prices and performance of your investments are now driven by AI decision-making, not just human fundamentals. What should you do about it? First, understand that this isn't necessarily bad. AI traders are often more rational and less prone to panic than humans. They can actually stabilize some market swings by spotting opportunities humans miss. But they can also create flash crashes and strange volatility. Second, don't try to time the market competing against AI. You can't. If you're a day trader or swing trader trying to beat these agents, you'll lose money. Instead, adopt a long-term strategy. Buy quality companies and hold them. AI agents care about millisecond gains. They don't care about your 10 or 20-year investment plan. Third, diversify more than ever. If markets become volatile, you want your portfolio spread across different asset classes and sectors so no single bad move takes you out. Finally, stay informed about what's happening in AI and markets because this is moving fast. The landscape is changing month to month. What's true about trading today might be obsolete in 6 months. This is where it gets surprising. Retail investors who understand AI trends often make better decisions than those flying blind. Here's what this means for you. The future of trading is already here. The financial world is being reshaped right now by AI agents that think faster, act with precision, and learn from every trade. Robinhood CEO saying AI will match human traders soon isn't a prediction. It's an acknowledgement that the change is already well underway. The implications are massive. Markets will likely become faster and more efficient, but also more volatile. Trading careers as they've existed for decades are being transformed. Wealth concentration will likely accelerate, and regulation is lagging behind the technology. But there's also opportunity. Understanding these trends, which you're doing right now by watching, is the first step to not being blindsided. For your investments, remember, don't compete with machines on speed. Play the long game instead. Build wealth through consistent, disciplined investing. Stay diversified. And stay informed about how AI is reshaping industries and markets you care about. The window where human traders held a decisive edge is closing. It's not closed yet, but it's closing fast. Understanding that change is what separates investors who thrive from those who get left behind. Want to stay ahead of these AI-driven market changes? Subscribe to daily AI Power News headlines for deep dives into how artificial intelligence is reshaping finance and technology. Follow for daily AI news. Hit that notification bell so you never miss a story.